Okay, so let's see what they actually wanted you to do. So when they ask you to prepare a depreciation and accumulated depreciation account in your general ledger, it is your T account, okay? So I've already done the format of what your T account would look like. You have your debit and your credit side, and you've got your date, details, your folio number, your amounts. Okay, so they want you to prepare a general ledger account. But before you can even do that, before I can document anything in there, I first need to go work out, okay, what is the depreciation amount for that year to be able to capture the amounts in my general ledger account. So what you first have to start off with is you start off with, okay, what was the cost of the depreciation? Now, in this question, the cost was 67,200. Okay, so I document that. Then I show when it was purchased. The depreciation rate was 20%, and I indicate what method it is. Okay, now this you would generally find in the question, so you would just highlight it in the question. I've put it now here on Excel because I use the information to do the calculations in the cells itself, but you would physically write this out. Now, what is important is you need to go look at the date purchased. Is it in the beginning of the year? Just make this work. Okay, so I need to go look. Is it in the beginning, during the year, or at the end of the year? Now, why do I need to know this? This is very important to determine if this 20%, remember that's per annum, that's for an entire year, whether I need to go adjust this. So did we use the asset for an entire year, or did I only use it for a part of a year? Because if I've used it for parts of a year, I will have to go adjust this only for the number of months that I physically used it in that year. Okay, now in this scenario, you can see that our year end is 31st of December. So I've only used this asset from 1 July to 31st of December. So for how many months have I actually used the asset in year one? You can just type your answer in the chat function for me. Okay, so Tebe says 5. Okay, anyone else? How many months do you think we've used this asset for? Pamela says 6. Okay, now how do I determine how many months? If it's on the 1st of July, that means I start from the 1st. So for the full month of July is month 1, August is month 2, September is month 3, October is month 4, November is month 5, and December is month 6. So because it was from the 1st of July, it's 6 months. If it was at the end of July, it would have been 5. Okay, so we've used it for 6 months. That means we will have to adjust this to reflect a 6-month period. Okay, now how do I do that? I'm just going to put this in red just so that you can see it. We take the 67,200. Let me just make it slightly bigger so that you guys can see it properly. Okay, so the 60,700 of 200, that's the cost. We multiplied with the 20%. Now that is the rate per annum. Now we said we've only used it for 6 months. So how do I adjust it? I multiplied with the 6 months over 12 to reflect I've used it for 6 months out of the 12 months. Okay, and then the depreciation for year 1 is 6,720. Now we said to account for depreciation, we will debit your depreciation account. Okay, so at the end of the year, I debit depreciation. But my contra account is the accumulated depreciation account. Now, what you will note is we indicate what type of asset it is for. Now, the reason we do that Generally, in practice, you have multiple types of assets within the business. So to keep track of what the carrying amount for a specific type of asset is, you need to indicate the accumulated depreciation for that specific type of asset to make it easier for you to work out the carrying amount for that asset. So then we go and we account for the amount we've calculated here, which is the 6,720. Okay, so that's step one. Now, because we've debited depreciation, I need to go credit accumulated depreciation with the depreciation account for exactly the same amount. Okay, so that is year one. Now we said to balance off an account in year one, if it's only got one entry, you do not have to do anything else. That is the balance. Okay, so for year one, we leave it as such. Now let's go work out the depreciation for year two. Now in year two, you'll see we've used it for the entire 12-month period. So I'm going to do the same exact calculation, except I'm not going to apportion it now, or you don't have to apportion it because I've used it for the full 12 months. But I've just indicated here that we've used it for 12 months over 12. You can leave out that step. It's just for documentation purposes while explaining in class, but you don't have to show it if it's for a full year. So our depreciation based on the straight line method is now 13,414 Rand. Okay, so what I do is for depreciation account in the second year, I account for the accumulated depreciation, but now at the 13,440 Rand. And then my contra account is depreciation 13,440. But now remember, we said for the nominal account, if we think back to the first semester, at the end of the year, we close off all expense accounts, all income accounts to our profit and loss account to make it a zero. So we also need to show that closing transfer to our profit and loss account in both year one and year two for our depreciation account, and the amounts would be equivalent to what it was for that financial period, so for that year, to make it a zero. Then the last step for the accumulated depreciation at the end of 2018 is now we have to close it down to get to the accumulated balance. So what we would do is we would add up the total, which is the 20,160. It is also 20,160. Our balance brought forward, so our debit and credit side would be the same. And then for the next financial period, our opening balance would be that. So why do we do that last step? Is to work out what is the accumulated depreciation at that date. Okay. And that is how you account for the accumulated depreciation and the depreciation in your general ledger. Now to do it in your general journals, which was the next question, show the depreciation adjustments and the closing transfers in your general journal. So now we're just accounting for it as a journal as opposed to a general ledger account. Your entries will be exactly the same. It's just the format you're showing it in will differ. So I'm just going to unhide all of this. So in here, year one, we're going to debit the depreciation, exactly what we've done here, debit the depreciation account, and we credited accumulated depreciation. Now I just showed in a journal format. So I debit the depreciation account, I credit the accumulated depreciation for the furniture. Then I give a description at the bottom to say it's adjustment for depreciation on furniture for the year, and I show a calculation just so that if I go back later, I know exactly how I got to that figure. And you enter the amount in the debit and credit, and then your closing transfer is I take it to the profit and loss account, the depreciation amount, to close it off, and that's my closing transfer. and I repeat exactly the same method in 28, okay, with the amount calculated. So that is how we account for depreciation in our accumulate and depreciation account, as well as our accumulated depreciation account. So we've shown you how to do it in a general ledger format, which was the first one, or in journal format, which is the second entry. Okay, do you guys have any questions on this? Because the questions you have for homework will use the same principle, just different calculations. So do you guys have any questions on this specifically? Denise, Kosimang, do you have questions? Do you understand what's happening now that I've explained it, or is there something that the two of you are still wondering about? Denise, you will get the hang of it. It's just a lot of different concepts. So once you do the questions, you will start feeling more comfortable with it. Unfortunately, all of the things we are looking at, all the things we do is specific things in accounting that we apply. So we're looking at specific concepts, and each concept has its own specific rules. Okay. So if there's no other questions, let's quickly see just if there's anything else. Yes, you are welcome to email me any questions you have on this. Okay, so what I want you to do for homework, and then we're done for today, is for Learning Unit 2, go work through question 2.8 and 2.10. If you've got an older textbook, just on Monday, maybe just make a copy of the questions at the library. So 2.8 is similar to what we've done in question 2.9 today. It just focuses on the debtors account with the corrections. So instead of doing the creditors like we did in class today, you now have to go apply it to a debtors scenario. And then question 2.10 asks you about the concept of set-offs. Now, if you're unsure what that is about, in your LAC activities, one of the activities you have to go do research regarding set-offs, and that will also help you answer this question. Then there is the ICE activity 2, which relates to your debtors and creditors reconciliation, which is due Monday, but we'll recap quickly the recons Monday morning just to answer any questions to help you complete that activity. And then I want you to do question 3.2 and 3.3. It is exactly what we've done in class now, but with different values and different methods. So the one has the diminishing balance method, and then, okay, so the one they bought in the beginning of the year, the other one they bought somewhere in the middle of the year with the diminishing balance method. So you're going to apply the same principles we've done in class now. The calculation is just going to look slightly different. Okay, so I want you to then go and practice how to do your general ledger and general journal accounts using those two questions. And if you've got any questions, you are welcome to email me, or you are welcome to raise your hand or just type in the chat function before we wrap up for today. So do you guys have any questions? If you don't have any questions, you are welcome to log off and I'll see you guys next week. Have a lovely day, guys.